You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports, we connect the dots so you know the actions you can take, how your family or business can benefit from current events most of all. Thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender on Ron Siegel Radio.
Welcome back.
Welcome back, Chris Bissonnette, the FAFSA Pro. Welcome, buddy.
Thank you. Good morning.
Glad to have you with us. Hey, let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. Today is National Teddy Bear Day. Now, quick story, because I get caught going down rabbit trails, although I guess it would be a teddy bear trail today. As many of you know, I do enjoy going and walking Balboa Island. There's a house there. If you've never walked the island, it's a great place to walk. But there's a house there that, you know, they've now labeled it Teddy Bears Gone Wild. I guess the lady had a couple of teddy bears. Now she's got a few hundred teddy bears, maybe more. Every season it's decorated with, so they're probably getting ready to put out the Halloween teddy bears, followed by the Thanksgiving teddy bears, Christmas teddy bears. Although here in Southern California right now, it's hot, so it might be the bikini teddy bears. I don't know what they're doing with it. I haven't walked by there in a few days, various issues going on. But today's National Teddy Bear Day. Today is National Wiener Schnitzel Day as well. Yes, I do enjoy Wiener Schnitzel, although there should be some gravy on there, shouldn't there? I mean, isn't it? You don't usually put a little gravy right on top of that? Yeah, we'll go on a little traditional here, National Wiener Schnitzel Day. And the beauty of the last celebration of the day, I got to do it, Josh. Okay, so today is National Boston Employee Exchange Day. So Josh could do my part of this probably better than me. I have no idea what he's doing in the background, though. So I guess we're not going to exchange today, Josh. We'll just talk about it. And I did do this when I had an import-export company many, many years ago. We had Trading Places, we called it. If you remember the movie Trading Places, and I'm not a movie guy, but we had the warehouse people and the office people all exchange places for a day. They didn't really exchange. They just went and worked with one another for a day. And very fascinating. Everybody got a chance to learn about what everyone else was doing. That was kind of fun. I'm not sure it was fun for them. It was fun for me. But in any event, let's move right along and see what's going on in the markets. Dow Jones Industrial Average up 582 points. S&P 500 is up 63. The NASDAQ is up 177. Oil up 74 cents a barrel. And the 10-year Treasury down ever so slightly at 3.707. We're watching all of these numbers for you. Oil, gasoline prices, gas $3.27 is the national average for a gallon of gasoline. Unfortunately, we don't get to pay what the rest of the country pays. We are in California, and we got nothing.
It's all there, black and white, clear as crystal. You get Nothing. You lose. Good day, sir.
Yeah, we lose. We're in California. 471 is the average for a gallon of gasoline. 327 is the national number. Josh, you're one of those under $4 people. What about $3.50 a gallon over there? I think there's only 4 states in the union right now that have gas over $4 a gallon. Everyone is over 4. Washington. Washington is 4.15. Hawaii is 4.63. California, 4.71. We are number one. I'm not sure we want to be number one in that category, but we are. Speaking of number one, boy, got into a fantasy football league. Talk about mixed emotions. So, yes, I am a Ram fan. No Raiders allowed here. Just kidding there. My friend Chris will be in a minute, and I know he's a big Raider fan. But my fantasy team had Montgomery, and he beat the Rams, so that was not positive. I guess it's a bittersweet, so I put my team way up. So I guess I can't complain too much about the Rams losing. I don't know. We'll have to see how the Raiders did. Did the Raiders play the Chargers, I think? I think the Raiders played the Chargers. I don't remember what maybe Chris will know what the score was of that game. Raiders against Chargers. They said they don't need air conditioning in SoFi. I wonder how the stadium was yesterday. I bet it was hot because I know where I was. It was about 110 here in Anaheim when I was down at the beach in the morning. It was in the high 80s. So warm is to say the least. But we're watching all of these things. NFL is back. They came out with this. I'm gonna say it because I can. I don't understand their thinking about their halftime show. I mean, I heard the announcement of the halftime show. I've never ever heard of this performer that they've got for the halftime show. So what do you do when you're old and you want to know who this performer is? Because you would assume it's probably a top name performer. Super Bowl, big time, right? So what did I do? I went to Amazon Music, pulled up the guy's name, went to the first song. Well, if it wasn't an F word, an N word, or something along those lines, he never said a word. So, I guess it's going to be beeped the whole time through. I guess that's what the whole idea of the halftime show is. So I have a copy of the halftime show. It's already on my computer. We are at Ron Siegel Radio. We do things very quickly. Here's what you're going to hear for the halftime show. That'll be the halftime show this year. So now you don't have to watch it. It's already done. I guess I'm supposed to call it the big game. The big game is what they're going to say it's called. We don't pay for the rights to use the other name. So the big game. You got to wonder sometimes. I thought the idea would be to get the biggest audience possible. Or maybe it's to alienate the most people possible. Maybe that's it. Oh, well, we'll move right along. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets, the latest on the luxury home market. We'll talk about it. Student debt relief program set to expire. We'll talk about that. And on the flip side, it's time to get those student loan applications in, even if you don't think you're going to get any money. Chris Bissonnette helps people find money that they didn't know they were going to get, but you've got to fill out the forms the right way. You've got to have your assets strategically placed. Chris understands that. He shares that information with us. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less? All without having to spend more each month than you spend right now. Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990, and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number that you put into your mortgage calculator. Yes, that mortgage calculator is available for free for you for life. RonIsMyLender.com. What did the rates do on Friday? Conventional 30-year fixed down 6.218. Jumbo 30-year fixed up 6.627. FHA 30-year fixed down 5.961. 30-year VA fixed. That was up 5.681. USDA 30-year fixed up 6.054. If you want our thoughts on the market, we put out a report every business morning as early as the data allows. rsrlinks.com/market minute. rsrlinks.com/market minute. We will send that out to you for free. All you have to do is go over there, subscribe. We don't sell the information. We don't give the information out. We put out a report, usually 3 or 4 pages. Yes, the type is big because I can't see, and we try and make it as simple as possible. Let's take a look and see what's happening in the markets today now that we've looked at what the rates were on Friday. The S&P 500 now up 61.5 points, 1.14%. Markets are looking good right there. 10-year Treasury, this is the yield, down 1 basis point, 3.71. Mortgage-backed securities. This is the bond. It always moves the opposite direction of rates. No, the 10-year treasury and the rates are not the same. They don't drive each other. They mirror each other a little bit, and they haven't been too close or as close as they normally are. But right now we're looking at the bond is up 7 basis points. The question is, why is this happening? The Fed is about to embark on a Fed cutting cycle. Starting next week is when we're going to see that happen. There's a lot of question marks about this, and I'm going to share some of them with you. And we're going to talk a little bit about why we're seeing this. Rough week on stocks. September's historically no better. Back on August 6th, we said to be aware the double top, and it reminded us of March 2000. We've seen the S&P 500 rally higher after the August 5th decline and form a classic double top, moving almost 5% from it so far. No one knows for sure, but there could be more pain in store. The Fed about to embark on a Fed cutting cycle starting next week, but they're well behind the curve and have a lot of catching up to do. The 2-year Treasury often leads the Fed funds rate and is now 1.6% lower. The spread is reminiscent of 2007, where the spread was this wide. The Fed cut aggressively to catch up, but it was too late and we went into recession. Fed currently well behind the curve and will need to catch up to potentially stave off a recession. Some of us are of the belief that we're already in a recession, but you know my thoughts about the Fed.
Idiot. Such an idiot.
Yeah, that's right. So what happened? Friday's jobs report was weak, but the only part that appeared to be a little better was the unemployment rate, which declined from 4.3 to 4.2%. But if you really inspect the numbers, the actual July reading was 4.25, which was rounded to 4.3. Fed's August figure was 4.22 and rounded to 4.2, but in reality, it was only 0.03% lower. There are many in the media claiming that July's weak jobs report was due to Hurricane Barry. You know what I think about those folks, don't you? I think I've got a soundbite here, but I can't find it right now. Such idiots. I mean, it's just amazing how these folks.
Such an idiot.
Yeah.
Such an idiot.
Yeah, that's the one. Unbelievable that they would think that it's from the hurricane, even though we're seeing such bad numbers that have continued on and on and on. June was revised down to 118,000. July was revised even lower to 89,000. And August is 142,000 before negative revisions even hit. We said last month that the BLS even stated it was not due to weather and that the sectors that would be impacted performed okay. August CPI preview, the most important data point this week will be the August Consumer Price Index. It's coming out on Wednesday. Market estimates are as follows. CPI headline, 0.2% monthly reading, year over year to fall to 2.56 from 2.9. Core, 0.2 to 2.6 to 0.26 monthly reading, year over year to remain at 3.2. We're going to see what happens. Fannie Mae and Pulsenomics Home Price Expectation Survey been steadfast that housing would continue to provide a meaningful wealth creation opportunity this year. So far, that has held true. Our friends over at MBS Highway, they partake in the survey, and they've also won the Crystal Ball Award 3 times for being the best. Latest data from the top 150 economists in the U.S. was just released, showing the following appreciation forecast with the impact on $500,000 home. We've got those right there for you. Average 4.73%. Most optimistic, 6% quartile, 30,000. Most pessimistic quartile, 20,000. So we're still looking at very, very good readings on housing. They're going to keep on growing. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. Before we get into our featured guest, question of the day today. Do you know anybody with student loans? Do you know anybody with student loans? I'll say yes. I bet almost everybody does. We're going to talk about that in a minute. But today we are privileged to have with us Christopher Bissonnette, a certified financial expert who specializes in helping families navigate the often complicated world of financial aid. Chris has helped countless students maximize their financial aid, ensuring that they can focus on their education without overwhelming burden of student debt. Love that idea. Today, he's here to share his knowledge, provide some success stories, and offer practical tips on making the most out of the FAFSA. Let's dig right in. Good morning, Chris Bissonnette.
Good morning.
So, is there deadlines coming up, or what do we need to? Does everybody need to file a FAFSA, or should just the people who think they're eligible?
Everybody should file a FAFSA, even if you make $10 million a year.
Okay, so I'm not there yet. Thank goodness I don't even have anybody needing to go to school. So if you make 10, even if you make 10 million, so why would I file that if I'm making that much money? I'm of the assumption, okay, I'm not going to get anything from the feds. Why should I file? Why should I go through the effort?
Well, good question. And there's a lot of misconceptions when it comes to the FAFSA, the free application for federal student aid. Because when you file a FAFSA, you qualify for need-based grants, so income-based, asset-based grants. Some schools require it for a merit scholarship like LMU, so money based on your grades or maybe an instrument you play sports. You also qualify for work study, working on campus, being paid for that, as well as federal subsidized student loans. So getting a low interest loan that you don't have to start paying back until you graduate. So it covers those 4 areas. And a lot of people think it's just loans. You can earn up to $400,000 of adjusted gross income and still receive need-based aid at some schools.
$400,000 and still get need-based aid.
The example I show people with my software is someone making $300,000 in California with $500,000 of liquid assets, and they qualify for a ton of need-based aid.
Now, you have to have your assets in the right spots, though, don't you, Chris?
Well, ideally, you just don't want to show a lot of liquid assets. The way that schools look at it is what assets, what could be sold to pay for college. So you could have $100 million in your 401k or IRA, or even a $10 million home residence, and that's not going to be counted on the FAFSA. They're looking at liquid money, your liquid brokerage accounts, checking, savings, things like that.
So I saw someone that posed a question on one of the groups on Facebook yesterday, and it said, should I invest in real estate or in a 529? And I know you don't give financial advice, but just from let me rephrase that. You don't give financial advice here. If somebody wants financial advice, they can call and hire you for that. But our 529 plan, which of those two, the 529 or real estate, which is better for me, not from an investment standpoint, but from a financial aid standpoint?
The financial aid standpoint, if you're trying to qualify for the most need-based aid possible, in that situation, a home residence doesn't count on the FAFSA. If you had a rental property, that's going to count against you as an investment. Same as 529s. 529s count against you as an investment, so they do count against you.
Now, do they look at, when you're looking at a non-owner occupied property, are they looking at the net value of the property, or are they just looking at the gross value of the property?
Net value.
Okay,
value minus what you owe.
Value minus what you owe. So if you've got that fully encumbered, it's not going to have much effect at all.
Yeah, if you have a huge loan on it, there's not a lot of net equity, then no, it's not going to count against you much. It's whatever that net equity is. It counts against you around 5% on the 5.84% on the FAFSA.
We're not going to hold you to the decimal point, Chris.
Well, that's what it is. I am the FAFSA pro, so
you are the FAFSA pro, so you understand that stuff.
But I tell people around 6% of anything that's liquid is going to count against you on the FAFSA formula.
But wait a second. So when we talk about real estate, that's generally not too liquid.
Correct, but again, if you have a rental property and you've got $300,000 of net equity, you're going to lose about $18,000 in possible need-based aid, because they do view that as a liquid investment.
Okay, so go get the home equity line of credit on that rental property, and max that out as soon as you can, before you're filling out those forms. And
that would be a strategy. There are very, as you know, having me on through the years, there are strategies you can do to qualify for more aid. It is a bit sophisticated. However, some people get hundreds of thousands of dollars in need-based grants by doing these strategies.
Hundreds of thousands of dollars. When we come back, I want to talk to you about hundreds of thousands of dollars. That's amazing that they're getting that much. Does anybody really need hundreds of thousands? Are any schools in that kind of price range now? We'll talk about that with Chris Bissonnette when we come back. The latest on the luxury home market, student loan, student debt relief programs. They're going to expire? Really? We'll talk about that and more. You can reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit RonSiegelRadio.com.
Listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Let's take a look. The latest on the luxury home market. Luxury living is about more than just stunning views, cutting-edge smart home technology. It's about elevating your lifestyle. And if you're in the market for $1 million home, now is, wait a second. Luxury in Southern California, $1 million market. You can tell this report was written for a nationwide sourcing. It's got to be multi-million-dollar home. Now is an excellent time to explore the thriving luxury market. Here's why. The number of luxury homes is growing. The top of the market or luxury homes can mean different things depending on where you live. But in general, these are homes that are in the top 5% price range in any area. According to a recent report from Redfin, the average value of those homes has risen to over $1 million. The median sale price for U.S. luxury homes defined as the top 5% of listings rose 9% year over year to a record $1.18 million during the second quarter, unquote. The same report goes on to show the percentage of homes valued at $1 million or more has risen to an all-time high. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490, FM 98.1 video feed, you are seeing there are more $1 million homes than ever. Percentage of homes valued over $1 million. I wonder what they have to use for Southern California. I guess it's probably got to be over 2 million, maybe. I don't know. That means if this is your desired price, you have options to choose from, each with different features and styles. Whether you're looking for the latest designs like modern kitchens with high-end appliances, exclusive amenities, or enhanced privacy and security, the market that fits that lifestyle is growing. Your luxury home is an investment. In addition, a luxury home could help you build significant long-term wealth. As the Redfin quote mentioned earlier says, luxury home prices are rising. That may be the reason there are a lot of people investing in luxury real estate right now. According to the August luxury market report, quote, by the end of July, the overall growth in the volume of sales in 2024 stood at 14.82% for single-family homes and 11.35% for attached homes compared to the same period in 2023. Want to know information about the homes in your area? I thought you might. We've got a free report that will give you that information. rsrlinks.com/ I think it's called Market Report. rsrlinks.com/market report. That's our friends over at Altos Research. And they check every home for sale every week and put out a report. rsrlinks.com/market report. You can go on there and get a copy of that report anytime that you would like to see it. With more $1 million homes on the market, prices going up, you have luxury options to choose from and a chance to build significant long-term wealth. Want to see the best homes in the area? Give me a call at 800-306-1990, 800-306-1990. Continuing our conversation today, Chris Bissonnette is the FAFSA Pro. So, Chris, what are some of the common mistakes that you're seeing people make, and how do they avoid them?
Probably the biggest one I've seen is on the FAFSA. It says, what's the worth of your investments? And people just put their 401k in there. They put their home equity in there. Literally just the way they answer that one question costing them potentially $100,000.
Wow.
Yeah.
So now I can understand, there's so many ways. How do you value your real estate? That's there can be 16 different ways of probably, I'm just exaggerating.
I think the easiest way to do it, Ron, because most people, what they do is they say, oh, it's worth $1 million, and then we owe, 300,000, so it's 700,000. And I'm like, all right, well, if you go to a school that uses the CSS profile, they will count, they can count your residential real estate. So ideally, you don't want that number to be very high. And really the only thing we have to really value it is your property tax. So I tell people to use your tax assessed value minus what you owe. And that's usually a much lower number. Now the profile will say, don't use the tax assessed value, use the current value. But I've never ever seen a school come back and challenge, the home equity, how you priced it.
Yeah, because so many, leading a lending team and doing so much with real estate, I've never seen somebody who valued their home legitimately. I mean, it's always pie in the sky because they're thinking, okay, what can I get for it, or what can I borrow for? And if it's a home, then the comps in the area are all say $1 million. Well, they're basically saying, oh, I think my house is worth $1.1 million, and that would really shoot them in the foot when you're talking about FAFSA filings, wouldn't it?
Yeah, more on the CSS profile if we're talking the residential real estate. But if they've got other properties, I tell them use tax assessed value. You've got your property tax bill minus what you owe. I think that's your best bet to use.
Bet you come up with a lot of times that's a negative number, don't you?
Negative or it's just much lower than, let me go to Zillow and then, see what it's worth minus what I owe.
And ironically enough, I've got reports that on Zillow's website, and I don't know if it's still there, but we copied it so that we would have it. They say they can be off by as much as 30%. So
sure. Exactly. And especially now with this, especially some parts of Orange County that have had a really high appreciation over the last 4 years. So that's one of the big mistakes. You don't put your 401k and your IRAs on the FAFSA, which people do all the time because the questions are vague. What are your investments? Like, it's kind of ridiculous the way they word it almost. Like, so people make a lot of mistakes on it. I always advise people, hey, if you've got, it's an $80,000 tax bill, you're going to hire a CPA to do your taxes. I suggest people at least consult someone the first time they do the FAFSA because there's just so much money potentially on the line.
Okay, so go ahead and harass me, Chris. I'm ready for it right now. My alma mater. Although I went to Chapman College, it was much cheaper then. Chapman University. Yes. Where's our prices now?
Good question. By the way, I know, just before we jump into Chapman, the LA Chargers, so you were kind of, mentioning their first, again, when they were in LA for 1 year before they moved to San Diego. Their training camp was Chapman College, by the way. So a little trivia nugget there for you. 1 year, I know, of all things, they right Chapman College. Chapman College, a private school here in Orange, Southern California, highly acclaimed. I think right now it's $95,000 per year is the cost of attendance. So that's tuition, room and board, books.
Wait, did you really say $95,000?
Yes, I did.
Wow. Ow! That's for 4 years, right?
That's per year.
Per year. So, okay. So when are we going to get one that's over 100,000?
We have it.
We have.
I have some software that I use to run numbers, and about 2 weeks ago, one popped over $100,000. And here in Southern California, Pepperdine University, its cost of attendance for 25-26 is over $100,000.
Over $100,000, and that's for a school. And I know it's a great school, and I have some friends that go there. I couldn't imagine going into Pepperdine and getting anything done. That campus is just so gorgeous, so magnificent. The view of the ocean and Malibu. I mean, I'd be mesmerized all day just wanting to sit out there. I went to a graduation there several years back, and graduation out there on the lawn.
Me too. I've been to one of those.
Right? I mean, isn't that amazing?
I stayed in those dorms once for something, but yes, it's a beautiful campus, prestigious, But again, most people wouldn't think like that school is going to be 100,000. So you're going to see a lot of schools around the country this year, next year, start to get over 100,000. It's more of the Ivy League type schools.
Now you're the FAFSA pro. I just do a little radio here and there. I know how to bring those prices down in a heartbeat. Nobody wants to listen. Josh and I have talked about it here on Ron Siegel Radio many, many times. So you bring the government is what helped us get these prices where they are. And it started out with George W. Bush, 43. So he made the student loans non-dischargeable in bankruptcy. So there's no reason for the schools not to charge a lot of money because there's no consequences when people don't pay. So if they go and they reverse that, and give them consequences if they don't get paid, I bet they become a little bit more prudent with that money on some of the tuition. Now, Pepperdine, those of us that are listening here in Southern California we're appreciative. We know that there's a lot going on. We get fires here. I bet their fire insurance at Pepperdine has gone through the roof over there with the way we've had fires here in Southern California.
Yeah, I could imagine.
Crazy, crazy stuff. Okay, so let's see. What other financial aid opportunities should students and families be aware of? How can they best position themselves to take advantage of some of these options?
Well, number one, they need to file the FAFSA. So 1/3 of U.S. families attending college in the United States do not file a FAFSA. I believe this past year it was 38% of families did not file the FAFSA. Why? We don't understand it. We don't think we'll qualify. I think my daughter filled it out. I don't know. We missed it. It's like completing your taxes. Nobody wants to do it. And I understand that. It's very complex. There's stressful for families. So that's number one, is you've got to submit the FAFSA. And two, as I advise people, you should talk to someone who knows how the FAFSA works the first time, just because the upside is too great. I mean, I have a client this year going to Johns Hopkins University, which is $86,000 per year. The client received $86,000 in scholarships and grants, free money, 100% covered.
That's amazing. And something. And when we come back, I want to talk to you a little bit more about your program and how it can help people, because that might be the biggest issue right there. Is not only I think most people don't know how to fill out the form, but my guess is most of them don't know how to get a hold of Chris Bissonnette. So we're going to talk about that when we come back. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990 at RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the first Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at RonIsMyLender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037. RonIsMyLender.com.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporate.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990, the Borrow Smart segment today, being brought to you by rsrhomeselect.com. rsrhomeselect.com just ran another scenario for a family with a 2.9% interest rate on their home. Borrow Smart effective APR was 1.06. Love it. Urgent student debt relief program set to expire, act by September 30th. If you have outstanding student loans, particularly if you've defaulted or missed payments, there are two critical programs you need to be aware of: the on-ramp and the Fresh Start programs. Both are set to expire on September 30th. Taking action now could mean the difference between manageable debt and significant financial hardship. Here's what you need to know. The on-ramp program was designed to ease the burden for borrowers resuming payments after a pandemic-related pause. It provides a temporary reprieve by not reporting missed payments to credit bureaus until September 30. However, after that date, missed payments will be reported, which could severely impact your credit scores. This program is particularly important for those who are struggling to get back on their feet financially. The Fresh Start program is another essential lifeline for borrowers. It allows those who have defaulted on their student loans to return to good standing, removing the default status and restoring eligibility for benefits like income-driven repayment plans. This program also helps by removing the negative mark of default from your credit history, which can improve your credit score and make you eligible for better loan terms in the future. Why you must act now? The expiration date of these programs on September 30 means the protections and benefits they offer will no longer be available. If you're in default, this could lead to wage garnishments, tax refund seizures, and other aggressive collection efforts resuming. For those relying on the on-ramp program, missing payments after September could lead to significant credit damage, making it harder to secure loans, housing, or even employment in the future. Here's what you need to do. Number one, contact your loan servicer. Ensure you understand your current loan status and the steps you need to take benefit from these programs. Number two, explore income-driven repayment plans. If you're struggling to make payments, an income-driven repayment plan could reduce your monthly payment based on your income. Number three, check eligibility for forgiveness programs. Some borrowers may qualify for loan forgiveness through programs like Public Service Loan Forgiveness. Investigate if you're eligible. Consider consolidated refinancing. Consolidating refinancing your loans may help you manage payments more effectively, though it's important to understand the implications of doing so. Bottom line, the clock is ticking for student loan borrowers to take advantage of the on-ramp and Fresh Start programs. Missing the September 30 deadline could have long-lasting financial repercussions. If you're in default or struggling with payments, now is the time to act. Give us a call at 800-306-1990. 800-306-1990. We'll put you in touch with some folks who know how to deal with these things. That is the Borrow Smart segment Brought to you by rsrhomeselect.com, rsrhomeselect.com. Continuing our conversation with the FAFSA Pro. That would be Chris Bissonnette. He is a regular contributor on Ron Siegel Radio, helping us understand what's going on financing of college. And, I'm not a big fan of college is not for everyone, my opinion. There are people that benefit from college tremendously. I agree. There are people that benefit from not going to college. We need electricians and plumbers and truck drivers and scores of other services that may not need that to go into the expense of what college has to offer. But, if you are thinking of going to college, if you want your child to go to college, if that's the right path for them, why not do it the smart way? I mean, we're paying so much in taxes. Why wouldn't you want to take advantage of what's available out there? And quite honestly, so many of these schools, Chris will talk about this more than me, they have massive endowments. Chris, isn't there some schools that they could go for decades without ever charging anybody, and their endowments would just cover their total cost?
Possibly. I mean, these endowments are incredibly large. I think USC, for example, is $11 billion, and I think Harvard's $53 billion, which is more than half the countries on Earth have. Just one school in the United States.
That's amazing. So, one of the things I always like is you always have some new and recent story. What's today's story for that maybe some on the average, maybe not necessarily going to John Hopkins. You already told us, 80-some thousand, but some of us that aren't quite as bright as that. Do you have any stories about that we can help?
Well, I do have success stories. The other thing I did want to bring up too, Ron, that's very important that most families do not do is each year the school distributes a financial aid award letter that's going to be found in the student portal. And a lot of times it's hard to find, which is incredible. People cannot even locate it, but it's in there. And most families never review it. Well, you can pull that up and see, okay, school's going to be $75,000. We're getting this little scholarship. We're getting this. Here's our student loans. Here's what we're supposed to contribute as a family. You can go back to the school and you can ask them to reconsider the aid that they've offered, sometimes called an appeal, or I call it financial reconsideration. I've gone from client getting zero in grants to $51,000 for 1 year by doing an appeal, sometimes more than one. So just very important for families to know that, like a house, you can negotiate the price, which I was surprised about 6 years ago, but I've probably done like 30 to 40 appeals, and 70% of the time they generate more aid. But I'll give you one success story. Big client of mine, they didn't have a very high income, but they had liquid assets, more than $1 million in kind of checking savings. And I ended up moving that money prior to filing the FAFSA. And the client received $8,000 in grants from USC and a federal Pell Grant. We went back and appealed, and they changed it to, it was like $46,000 or something. And then this year, the client got $68,000 in grants and grants at USC. So I think that student, because they kind of followed this strategy, will receive maybe $150,000 in free money over the 4-year period.
So grants is money that you do not have to pay back, right?
Grants and scholarships is the free money that you don't pay back. The tricky one is the grants. People always hear scholarship. Oh, you get a scholarship. Some schools give zero money for scholarship. So you might get in on a scholarship, but they don't give you any money. Where you really get money is need-based grants, showing the school you qualify financially for the school to give you $50,000 a year, for example.
That's a pretty massive amount of money. Those are life-changing numbers when you think about having to go in either in debt or coming out of pocket with $50,000 versus getting a grant for $50,000. That's massive.
Yeah, the common way is do loans, right? Do community college. We have no plan. We're so stressed financially anyways here in the United States. Everything's so expensive. So the plan is go to community college, then we're going to do student loans after. Well, the smart way to do it is no, we're going to ask the school to pay for part of it through their endowment. But it's kind of complicated.
Do you find more success when you go through the transfer process after you've gone to community college for a couple of years?
No.
Or just going 4 years at the main school?
You're better if you qualify financially, you're always better off going to the school because a lot of aid they give is in the first 2 years.
Okay. Sounds great. I mean, that's always love to have that aid. If you want more information on this, give me a call at 800-306-1990, 800-306-1990. Chris Bissonnette is the FAFSA Pro. He'll help you get the aid that your student deserves. He might even be able to show you how to maximize that, get a little bit more. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990 or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.